BCI has gradually been improving this year, but it looks like we might be losing a bit of momentum with just a fifth of a point gain.
Yeah, actually, in the first quarter, the BCI actually declined. And then it picked up momentum, and especially the third quarter, there was some strong momentum following on the World Cup and the positive environment we created there. But I think there's still some worrying factors at the moment. In August especially, we saw a surge in the BCI by over 3 points, and then now only 0.2 points, which indicate to us, that perhaps we've reached some type of plateau given some environmental issues in terms of the economy. And those are mainly, I think, if you look at our comparison with emerging markets, not that good as such. I mean, if you take 25 emerging markets, it's only inflation where we're doing fairly well, but in terms of the other indicators, not that well.
What sort of indicators are we looking at here?
Well, we're looking at budget balance, we're looking at the deficit on the current account, we're looking at your rand, your currency, you're looking at inflation, you're looking at real short-term interest rates and that type of thing. So we're still not, for instance, real short-term interest rates, we're at 2% plus, and there's some countries, I think, like India at -4%. So quite some different circumstances, and those economies are growing rapidly. But there's not a direct correlation between all those movements, especially in terms of the rand-dollar exchange rate. There's some countries that actually appreciated more, but it's doing much better in terms of economic growth, for instance. I think one concern is in terms of growth, we're about 3%, where other countries, we're the third lowest growth scenario at the moment amongst emerging markets. Now, the worrying factor there is the rand strength at the moment. Is actually, what is it actually reflecting? Is it liquidity, global liquidity pouring into these countries? Why South Africa has been such a favorite, I think standing 7th in terms of appreciation against the dollar, while other countries, emerging market countries, is doing much, is also having that type of inflow. So if our economies don't really start performing in real terms, we might find out, when these liquidity, these global liquidity dry up somehow, that there might be some capital leaving South Africa, especially short-term capital, that will have an effect on the rand and, of course, inflation and all that, and go forward.
Why do you think we measure up so poorly against some of those emerging markets? And I'm looking at things like growth, like the current account deficits, etc. Well,
let's take now an extraordinary country like China and so forth. Productivity amongst the labor is very high. They're competing everybody out. If you're not on that sort of international standard that they're putting in terms of productivity, you're losing out. And even the Western nations, advanced economies, are finding that out. So that is one thing I think we can improve on much. The other thing is policy certainty to some extent. These debates going on in South Africa is disconcerting. Especially if you look at business. Business isn't here to actually debate policy issues, but they hear it in the media, they hear it all over the place, and it confuses them in terms of where the country is going. But not only business, also consumers, house owners, whatever the case may be. So I think some of these debates perhaps should be more looked upon with more circumspection and be very more sort of research before one really puts it on the table for debate, because I think some of these directions that is set in terms of the medical aid, in terms of nationalization and those type of things, and the fiscal space we have in South Africa, just can't pick up all these stuff, and that in the end will be negative for investor confidence. And investor confidence is the ultimate confidence one would like to have, because it's looking long term. And this index that we produce is a short-term business-like type of doing business type of index. And it's not really telling you how business is viewing the country 2, 5 or 3 years from now. So that is important that we get our house in order in terms of that type of.
I was looking at some of the components of the index, and we had 10 of the sub-indices of the BCI improving over last year. We had a couple worse than last year. One of those was equities. Now, we had a fantastic month for equities last month. Did we have a particularly good one last year as well?
Well, the point is, the way we look at it is not to say that the equity market is below last year. It is actually telling us that in terms of the long-term trend, because we're looking at cyclically and for purposes of business confidence, it is trailing the long-term trend. And if you're not moving faster than a long-term trend, you are actually losing out in terms of a business confidence type of impact, because we're talking about the impact since the previous year. So the impact might be negative, although it might be improving. But we must remember we turned at 33,000 in the JSE All Share.
That was a high point.
That was a high point. It was about 3 years ago. So if we carried on along that road, we would have been now at 38 somewhere. I don't have exact calculations, and we're way behind that. We're falling, although you might be increasing, you're falling behind. Now the same thing happens in terms of your economy. If the world is growing at a faster pace and you are constantly falling behind, you're losing out. Your share in the world economy, your share in world markets is diminishing. And that is, I think, the main purpose why one should go for international best practice. The solutions isn't easy in South Africa. It must be hard thought. Education lies at the root of creating an economy that's growing, an economy that creates jobs that's sustainable, where people is functionally employed, not just by name, to be not unemployed, but to be functionally producing something, because salaries and wages are the counterpart of actual production that you put into the economy. And I think that is the sounder route that we must take to ensure that business confidence at this higher level, is much higher than last year this time, can take us forward to even higher levels. And especially in terms of economic, international and global comparison, to keep us going. I mean, that is important nowadays in the economy of the world.
And you're saying important to this is just a more consistent message from government about policy going forward?
I think it's consistency among sort of policy issues as well. Fiscal policy and monetary policy should be coordinated in a very close sense. I mean, it should be coordinated with your industrial policy. It should be coordinated with your infrastructure policy. You can't have an economy growing at 6% with no electricity, for instance. We've landed in a real bad situation at the moment. We're not out of the woods yet. I mean, the capital requirements for economic infrastructure must still be upgraded, and to be there for an economy growing at 5% or so is vast. And I don't think when one hears the demands for capital and capital expenditure, well, at the moment we also indicated in this BCI, it is the increase in public sector capital fixed investment is coming down. It is actually increasing at a much slower rate than 2-3 years ago, and that should actually pick up. And the same with private sector investment, fixed investment, a measure of confidence, the longer term confidence. There we have negative figures now for 6 quarters or so. So that is the issues that we must look at, and there's reasons for that. And we must, the BCI is only putting forward some view on the present business conditions and where we're standing and the confidence there. But I think what is much more important is building on confidence. That is what we need.